Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is everyone's favorite Mexican restaurant a good investment? In this video we will be analyzing if Chipotle stock is a buy. Could Chipotle stock ticker symbol CMG go even higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Chipotle. Chipotle was founded in 1993 when founder Steve Ells, inspired by the taco stands of San Francisco, opened the first Chipotle in Denver, Colorado. Within a month, that first Chipotle was selling over 1,000 burritos daily. Growing continued from there with their commitment to fresh, high-quality ingredients and customizable meals. They offer a variety of burritos, tacos, bowls, and salads featuring meats like chicken, steak, carnitas, and barbacoa, along with fresh vegetables, guacamole, salsa, and other toppings. Today, Chipotle boasts over 2,000 locations across the country, with their headquarters located in Newport Beach, California. Now let's look at the price action. Starting with the 1-year chart, we see that Chipotle had a CAGR of about 59%. Zooming out to the 5-year chart, we see that Chipotle had a CAGR of 35%. Chipotle is clearly a winner when it comes to price appreciation. Delicious. If we perform a backtest comparison of investing $10,000 in Chipotle Mexican Grill versus the S&P 500, we see a significant outperformance by Chipotle. A $10,000 investment in Chipotle would have grown to $37,385 compared to $17,515 for the S&P 500, reflecting a much higher annualized return of 34.79% for Chipotle versus 13.53% for the S&P 500. However, Chipotle's investment also carried more risk. Its standard deviation was 35.23% compared to 19.08% for the S&P 500. This translates to a more volatile ride, with Chipotle experiencing a best year growth of 65.65% compared to the S&P 500's 28.74%, but also a worst year decline of 20.64% compared to 18.17% for the S&P 500. Chipotle's maximum drawdown, the peak to trough decline, was 31.32% compared to 23.93% for the S&P 500. Even when considering risk-adjusted returns, Chipotle shines. The Sharpe ratio, a measure of risk-adjusted return, is 0.96 for Chipotle compared to 0.65 for the S&P 500. The Sortino ratio, which focuses on downside risk, tells a similar story, with a ratio of 1.92 for Chipotle versus 1.01 for the S&P 500. Chipotle has been such a strong performer against the S&P 500 for a long time. Now let's hop over to market share and take a look at Chipotle's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that Chipotle is categorized under fast food restaurants. Expanding the fast food restaurants tab, we can see that Chipotle has the 4th largest market share and is growing. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Chipotle, CMG, and see that the market share is 1.2% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Chipotle attracts a decent amount food spend and is growing market share. The 5-year market share CAGR for Chipotle is 8.21%. This means that Chipotle's market share is handedly outpacing growth in the wider industry. If we start in 2020, we see that the market share was 0.93%, 1.01% in 2021, 1.04% in 2022, 1.15% in 2023, and 1.2% over the trailing 12 months. These are all good signs that Chipotle continues to be a great company. Let's take a look at the fundamentals to learn more. Gross margin is 41%. This is excellent for a restaurant. Revenue has compounded at around 18% over the past 5 years and has reached over $10.2 billion most recently. Chipotle's revenue is growing very nicely, though we should note that 2020 was the low point of the past 5 years, so I think it is unlikely that growth will continue at this pace going forward. When we look at cash flow, we see a 38% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 14% CAGR. As a result, free cash flow has grown at a 60% CAGR. Chipotle looks pretty good here. Growing operating cash flow and more slowly growing capex means the company is growing free cash flow at a very healthy pace. Weighted average shares outstanding have fallen over the last 5 years, going from 28.4 million shares in 2020 to 27.7 million shares most recently. Chipotle has been buying back shares. This is great. I don't see any reason why share buybacks would slow in the future. Nice job, management. Now let's view return on invested capital. Return on invested capital has grown from 8.4% in 2020 to 18.8% and most recently. This is a great trend. Hopefully Chipotle can continue to improve return on invested capital. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -3 days in 2020 to -7 days most recently, Chipotle has gotten more efficient over time. Nothing bad here. Love the negative value. Love the trend. Now, let's look at Chipotle's debt. The net debt to EBITDA has fallen over time, going from 3.9 in 2020 to 1.4 most recently. This is very good. Chipotle has decreased their debt load over time while maintaining a healthy level of leverage to supercharge growth. It is no secret that I am a huge fan of the company. In any event, should it be added to the watch list? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the food fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Chipotle. It is a restaurant company with a gross margin of 41%. The 5-year revenue per share CAGR is 18% and the 5-year free cash flow per share CAGR is 61%. Excellent gross margin and great revenue and free cash flow growth is beautiful. Love to see it. A return on invested capital of 19% is good and getting better. Next, the cash conversion cycle of -7 days is very good and getting better. Concerning debt, a net debt to EBITDA of 1.4 means that it would take Chipotle about 1.5 years of earnings to pay back their debt. So from a fundamental standpoint, Chipotle does still look good. Now let's switch our attention over to valuation. Chipotle is overvalued relative to the S&P 500 with a ratio of 2.6. The price to earnings growth, or PEG ratio, is 3.2, indicating that Chipotle is overvalued relative to their projected earnings growth. Chipotle is a great company. They operate in a very competitive restaurant space but are dominating due to great management, strong pricing power, and efficient throughput. Chipotle is doing all of the things I like to see: growing market share, free cash flow, and return on invested capital. Upcoming is the 50-for-1 stock split. For those already owning Chipotle shares, you will get the extra shares from the stock split automatically. Please note that the market capitalization of the company will not change, but the share price will be cut by a factor of 50 and you will receive 49 extra shares for each share of Chipotle you own as of the 25th of June. There is not much more to say. Chipotle is a great company with lots of growth ahead. This one is easy. For me, Chipotle is going on the watch list. Many thanks for watching. What do you think about Chipotle and its amazing growth? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.